And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to the program tonight. New data out suggesting that for the first time in quite a while, residential housing markets outside the Western Cape are beginning to move. And I mean, if you consider that the home that you live in is probably your biggest investment, especially if it has solar panels on top of it, I suppose, well, then that really does tell you how important this could be, especially if housing prices have really stagnated for such a long time. I mean, this has been such an issue. Cape Town, we know, has really benefited from semigration. There are some suggestions that the peak of this immigration curve is kind of over. Well, let's see. I mean, Joburg's sort of economic dominance, if you like, its economy much bigger, Gauteng's economy much bigger than the Western Cape still, well, maybe that will start to reassert itself. Does depend, of course, and the other risk is that this may all just be fragile, may all be about interest rates, really, and nothing else. The other day, you would have heard a conversation with Kirby Gordon from Fly Safa. It was on Monday evening, just before 7 o'clock. And we were talking about the practice that Fly Safa indulges in. They overbook. Now, he said that this was universal in the airline industry. And I've kind of always just presumed that this is what happens, that most airlines do a little bit of overbooking. He had a justification for it. You can hear it on the podcast if you like. Well, Seme and Airlink in the last 24 hours both saying, nope, they don't do that. They don't overbook. Well, we'll hear from Seme about how they manage it, because Fly Safa's argument was what they do is it allows them to then manage a cancellation policy in a much better way. Just very interesting to see how that plans out. I was a little surprised to see one airline saying everybody does it, and then to see two others saying very quickly, actually, no, that's not the case. And I thought that was interesting. Just a reminder today as well about tourism and the importance of it. And I've been a little curious about this. So firstly, and I always remember Tito Mboweni, unfortunately, taken too soon from us. But when he first started talking about how tourism could really change the economy, it was just at the start of the pandemic. He said this would be the thing that would do it in the longer term. And the reasons for this are obvious. If you have a large number of people who have been betrayed by your education system, aren't able to go through tertiary education for various reasons, well, being a tour guide working in the tourism industry is something they can do. And the customers come to you. You don't need to build a factory. They'll come. And I've always been struck by that logic. Seems so sort of obvious when you put it like that. And yet I don't see a huge tourism push for South Africa at this stage. And we'll find out a bit more about that as we go through the evening together. Good to hear from you. You may be involved in the tourism business, actually. 011 883 0702 021 446 0567. And voice notes tonight on 072 702 1702.
702.
702.
Stephen is on The Money Show.
6 to 8 p.m.
All right, well, we start tonight with a focus on property prices, with more evidence that finally property prices are now recovering and, in fact, beginning to increase. It is also about Gauteng. Business Live quoting figures from Stats SA today that in Joburg, house prices first started rising actually in August. Obviously, house prices continue to rise strongly in Cape Town. Some evidence, though, that the peak of the middle-class immigration trend from Joburg to Cape Town might, in fact, be over. Justin Easthorpe is provincial manager at Uber Home Loans. Justin, good evening. What's your information telling you about what's happening in the residential housing market? What's changing?
Good evening, and thank you for having me. So, yeah, there's been a few changes, and in particular, I think what's really important is to see the house prices increasing in Joburg. We haven't seen a real increase in house prices in Johannesburg or in Gauteng in particular, since probably 2010. So what we are definitely seeing is an uptick in property prices, and hopefully we see more of an increase going forward.
Why is it changing? Is it just lower interest rates? Is it sentiment around the coalition? Is something else happening?
I think there's a number of factors. Firstly, I think that this immigration we've seen reduce since in the last couple of years. So people wanting to move to the coastal areas have dropped, and really people still want to be in Joburg. It's still the financial capital of the country, and I think people are realizing that there is more opportunity in Gauteng, and perhaps that immigration won't be as dramatic as we've seen in the past.
I mean, prices when it comes to homes are specifically around supply and demand. For a long time, particularly in Gauteng, there's been a dynamic of people who grow up in a township moving into suburbs. Now, if you look at the sort of structure, still apartheid special geography in Joburg, that momentum must still have some way to go. There must still be demand for suburban properties just because of that.
Absolutely, and what we have seen is in particular the Gauteng South and East market is more affordable, and we're seeing a lot more activity in that particular area, where we're looking at the average purchase price of about 1.2 million rand, and also a lot of first-time home buyers moving into that area as well. So we certainly are seeing that the prices are stabilizing to allow, in particular, first-time home buyers to come into the Gauteng market.
Is it quite a fragile recovery? I mean, Joburg's in a very bad state. I mean, I'm sure we're going to get into a position where people are going to say they want two things for a house. They want to know that it has some sort of, electricity backup. I mean, that already happens. And secondly, they're going to want to know how often the water is out. I mean, just those problems in Joburg, and particularly water, could really make this recovery stall.
Absolutely, and that is one of the issues we are seeing, is that our infrastructure is still relatively poor, and we really are hoping that our municipalities can get their act in order and prepare or repair what's broken. So yes, will it be a slow recovery? Possibly, but a recovery nonetheless.
Is it possible to know how strong this recovery could be? And I suppose interest rates are a major factor. I mean, if we have a couple more interest rate cuts earlier in the year, that would move prices quite nicely.
Absolutely, and the majority of the market does hinge on the interest rates, which really frees up household cash flows, creates affordability for those first-time home buyers or existing home buyers. So interest rates certainly do play a very big portion, and it also creates positive sentiment in the market as well. So we're on a sliding trajectory now with regards to interest rates. We're hoping that we saw a recovery even in the last 25 basis points reduction, and hoping to see more this year, to see a stimulation of the home loan market.
Justin, thank you. Justin Easthorpe.
Housing market.
Justin Easthorpe, thanks very much indeed, Provincial Manager at Uber Home Loans. Well, this should also translate into better returns for property investments. Forecasts from the SA Real Estate Investment Trust Association suggesting that these investments could get a return of up to 9% this year. Kaylin Naidu is an independent property analyst. Kaylin, good evening to you. 9% a year. Is that a reasonable expectation from real estate investment trusts?
Good evening. So you're looking, that's an income return. So we're looking at about 8% to 9% income return from the real estate sector. That's translates to about 3 to 4% growth in earnings in 2025, largely driven by a better economy, improvement in fundamentals across the whole sector, from retail, industrial, and office, as well as lower interest rates have helped. And no load shedding as well for the last almost 300 days. Big savings on diesel. Trading is happening. No interruption at this stage.
Property is often about confidence. So this takes us again back to, I suppose, let me call it middle class sentiment, for want of a better phrase, around the national coalition. People need to be confident of the future to pay more for a property.
Yes, but so what you saw last year as well, the sector initially... it was quite muted at the beginning of the year. Then there was increased institutional buying and interest, and uncertainty just before the elections. As soon as the election outcome with GNU, we saw the sector rise quite sharply. And so that meant there was more confidence in South Africa, and lots of investors started coming in from generalists and balance fund managers as well. And adding to that, we had rate cuts. So the confidence in the property sector improved quite a lot.
What needs to keep going right for this to actually happen, for there to be a real return on investment in the sector? I mean, we realize it could be quite a fragile recovery. I presume, firstly, there needs to be no problems with the coalition government, and secondly, interest rates need to keep being cut. But I presume there are other factors too.
Yes, so the big one right now for the sector is the water issue, water outages. Well, thank God we've got rains over the last couple of weeks. But still, you find that there's lots of water outages, and landlords are investing quite a lot, from 2 days backup water to to 4 to 5 days. So that's a lot of money going into that, as well as service delivery. They're doing stuff that they're not supposed to do, but you have to look after your property and then keep your tenants as well. Those are extra costs and rising municipal charges, which are going above inflation rates, and you're not getting that service in return. So that's the biggest challenge for this sector at this stage.
I presume some funds will be in a better position than others, depending on where their properties are, how they manage their properties, how much experience, etc.
Yes, and it depends on the type of properties you have as well. So retail sector quite strong, and more so in the township and rural areas, also boosted by social grants that helps. And the industrial sector mostly linked to the retail sector, and mostly warehousing, logistics, distribution. And with the retail sector improving, as well as additional money coming from maybe the two-pot retirement system withdrawals, that also help the sector, plus lower interest rates as well. So it's all sector dependent. And in the office market, you have to be in the premium grade or A grade office properties as opposed to B and C grade. And depends on the region as well. Western Cape is much stronger than Gauteng, for example, even in the office market with 6% vacancies compared to Joburg at 17%.
Kellen Knight and Lowville, thank you very much indeed. Independent property analyst on the line there. Well, let's cross fingers, hold thumbs and all the rest, that the confidence continues and the property prices, the price that you would get for your home, does continue to increase.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, as almost everyone is now back at your desk or back in the spare room in the office, there are now more predictions that this could be a better year for mergers and acquisitions than last year, and in fact the year before that. In fact, the law firm Herbert Smith Freehill suggesting in a new report there's significant pent-up demand for mergers and acquisitions. Patrick Layton's a partner at Herbert Smith Freehills in Joburg. Patrick, good evening. Why do you believe there's pent-up demand for M&As?
Good evening, Stephen. Yeah, thanks very much for having me on the show. So we published our annual M&A Outlook document today, in which we've essentially taken the M&A market over the last year and had input from all of our offices across the globe in what we experienced in the previous year and what the outlook would be going forward into 2025. And so what we saw last year is unfortunately the M&A market globally remained depressed. We saw deal volumes down by 13%, but deal value was up by 9%. And if we look regionally at the Africa, it kind of followed suit with a similar story with deal volume down 23%, but value increased by roughly 271%. So although we're seeing low volumes, we're seeing much higher value transactions.
What factors lead to more deal-making activity? I presume the economy. That's probably the biggest factor.
Yeah, exactly right. So, I mean, the reasons we saw for the sort of depressed M&A activity, certainly by volume, during last year, it started in 2023 and carried through to last year, is really around the geopolitical uncertainty, the cost of capital of borrowing in order to finance these deals, and greater regulatory intervention. And I think against that backdrop, the reason why we're seeing volumes go down but deal value go up is investors are becoming certainly more strategic and circumspect in their acquisitions. And so there are fewer deals, but better quality deals with higher value.
It seems that deals are taking a bit longer. Their time scales are extended. I mean, are people sort of, rubbing their hands before everyone shakes hands? Is there something else going on?
Yeah, look, I think we're certainly seeing that. So there's a longer period between signing the deal and actually closing it. And these longer periods are mainly due to regulatory intervention. So greater regulatory intervention around the regulatory approvals required by government to implement these deals. And also what we're seeing is some buyers going into these deals without having first secured their finance to finance these deals. And that's mainly around the cost of capital and the issues with obtaining this capital. And so they're having to go out and maybe find this capital and raise this capital after they've started the bidding process if the sales are by way of auction. But also what we're seeing is greater due diligence by buyers into the assets. So ESG, regulatory and reputational risks remain key areas that we're seeing in the due diligences. But also what we're seeing is more practical involvement from a due diligence perspective. So not so much just relying on the documents in the data room, but buyers are actually getting on the ground and interviewing management and actually doing site visits to get into the nuts and bolts of the business. So the regulatory interventions together with the longer due diligence process, I think is seeing deals taking longer to close.
We expect economic growth of about 1.7% in South Africa this year, probably 2.1% next year. That's what Standard Bank told us last night. In other words, we should see a bit more M&A activity this year and even more next year?
Yeah, we believe so. I think globally we believe so, and certainly from an Africa and a South Africa perspective, we are hopeful that M&A activity from a volume and a value will will increase during this year. I think we mentioned in one of our previous reports at the end of COVID, we saw an increased deal flow, and that was sort of the term used, I think, by a number of people was the new normal, and investors getting comfortable with the new normal and the issues around that presented itself during COVID. But I think with the geopolitical concern, so there were 74 national elections last year, which added to the sort of geopolitical uncertainty, and those have obviously come and gone. And so we're seeing that clients are adapting to this new kind of normal, and investors will, we hope, have become more comfortable with it. And so while these challenges remain, we think we will see more or increased levels of M&A activity both globally but also within Africa and South Africa.
Patrick Layden, thank you so much. Partner at Herbert Smith Freehills in Johannesburg.
Show.
The markets.
Chris Stewart's portfolio manager at 91. Chris, good evening to you. Once again, so much of the action happening in the United States today. It was about CPI for December. Their inflation figures at first glance looked almost a little higher than expected, but core inflation was lower than expected, and that got US markets going, and perhaps the JSE as well towards the end.
Yeah, 100%, Stephen. We saw reasonable PPI data out of the US yesterday, and that was, I guess, predicating an important inflation print today. The market had been on tenterhooks waiting for it. We'd seen a benign inflation print out of the UK a little bit earlier on in the day, which the market, I guess, took well, particularly in the UK, but was largely ignored by other global indices. But then we had the US inflation data coming out better than anticipated, and that had a variety of factors that caused the dollar to sell off somewhat. It caused US treasuries and bonds to rally, and the market to start discounting a greater likelihood of rate cuts as inflation looks increasingly benign in the US, and that really got the equity market going. It's settled down a little bit now, but you've still got the Dow up well over 1%, the S&P up about 1%, and the Nasdaq up about 70 basis points. So a reasonably solid environment in the US. We've also had some good data coming out of some of the early reporters in the US, particularly in the financial services sector as well, which I think has got the market going too.
I mean, we had US financials reporting, BlackRock, people like that. They're doing very well, as you say. I was intrigued to see while the US is roaring ahead again, Germany, for example, a very well-developed economy, something that many people have looked to over the years, they had their second year of contraction last year. That's what their figures told us today. We really do see kind of the rest of the world and the United States at the moment, completely different pictures.
Yeah, I think that's fair. We are seeing, and there's a term, US exceptionalism, that has been getting more and more airtime in recent years. We have seen the US economy continuing to grow pretty strongly, although that growth has been quite narrow. If you look at the earnings growth of the S&P, the so-called Magnificent Seven or Mag 7 stocks have been responsible for the bulk of the earnings growth being shown by the equity market in the US. But nonetheless, you've seen stronger macroeconomic performance in the US. You've seen stronger labor markets in the US than you've seen in Europe. And as a consequence of that, you've seen the dollar trading upwards towards parity with the euro. and somewhat different mutterings coming out of policymakers in Europe versus the US, with Europe talking about more extensive rate cuts, whilst at least until today's more benign inflation print out of the US, you had policymakers in the US talking to fewer rate cuts than perhaps had been previously anticipated. And that's, it's a trend that we've seen. It's a function really of the US market, the deregulated nature of the US market. And we've always seen the US market bounce back more strongly from tough economic conditions, as I think the structure of that market and the structure of the economy allows for a much, much more, if you like, rapid response to less benign conditions. And as a result of that, you do see the US economy tending to lead the world out of recession.
Chris Stewart, thanks very much indeed. Portfolio manager at 91. Bringing the time on The Money Show to 6:30.
The Money Show
with Stephen Grootes.
19 minutes now to 7 the time. Good to hear from you this evening on 011 8830 702 and 021 446 0567. Voice notes tonight on 072 702 1702. You might well have a story about house prices and values. You might find maybe someone in your family picked something up for a song, actually was able to move into maybe their first home for far less than they thought they would have to pay for it. Maybe are living in a place they're, beyond their wildest dreams. Or alternatively, it might be the other way. You have to sell your house and take a huge hit just to sort of move wherever it is you wanted to move. I do think house prices really, really matter. And in the end, it's one of the reasons why people talk about them. I'm always struck, I don't know if people do this as much. Maybe I'm just in a different phase of life. But there was a time you'd go to a social gathering, people you didn't know very well, and someone somewhere would say, "What did you pay for your house?" I was always slightly surprised. I mean, it was really just a way of them asking, "How much money do you have?" Now, what people do often, if you've got children of school-going age, is they'll start that question and try and place you by asking where your children went to school or go to school or where you went to school. Very interesting to see how important house prices are and houses and where you live to how people place you in a society.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
Quite a lot going on the airline industry at the moment. On Monday evening, you heard from FlySafair. They confirmed again that they do overbook flights. The National Consumer Commission is investigating them for that. And then their chief marketing officer, Kirby Gordon, said on The Money Show that this was a universal practice, that all airlines do it, that their competitors do it. Well, it seems that may not be true. Miles van der Molen is the CEO at SEM Air. Miles, good evening. Do you overbook your flights?
Good evening, Stephen. Thanks for having me on the show. No, we don't, and it's never been a policy of ours to do that. And I see in the last day or so, Airlink has also come out and said that they do not have a policy of overbooking. So that information is not correct.
FlySafair, one of the reasons they may have been saying it, I mean, we'll get into whether it's true or not in a moment, I do accept what you say, is that they are very worried about a National Consumer Commission investigation. I mean, they want the whole airline industry to be investigated. Are you worried you might now have to face an investigation, be a lot of paperwork for something you don't do?
Absolutely. The admin burden of Kirby Gordon's wild accusations shouldn't fall on us. He should really be a little more restrained with his words. But we have nothing to hide, so if we are subjected to it, we're not particularly worried about an outcome.
The argument from Safair is that by overbooking flights, it's easier to manage people who miss their flights to put them into other flights. And they suggest if they didn't do this, their planes would not be as full. There would always be an empty seat or two. And as a result, they would have to charge higher prices. Now, you must face a similar set of circumstances. How do you manage that?
Well, there's a couple of things. Firstly, our reading of the Consumer Protection Act says that this isn't allowed. So whether they want to and whether it's profitable is neither here nor there if it's against the law, number one. Number two, my understanding is they don't offer refunds for missed flights. So the seat is sold and they get the revenue whether or not the seat is filled or not. So I don't understand how that argument works at all.
What happens if someone misses a flight on your airline?
We do have a 100% no-show penalty, but the seat is flown empty. So we don't, in the Safair case, what appears to be happening is they fill the seat with somebody else and they retain the unflown passengers' revenue.
Okay. So does Fly Safair then have a competitive advantage against you because they overbook flights and you don't? I mean, they must be making a bit more money than you as a result of this.
It is an advantage. Obviously, Safair is facing many challenges on many fronts. The biggest is on the ownership, which also gives them a big advantage in terms of cost of capital and access to equipment. So it does seem that the deck is stacked in their favour, yes.
I mean, it's interesting that you mentioned that because we've been talking about that with Fly Safair. If I remember correctly, in fact, your company was not one of the ones that lodged a complaint, but you still say the fact that their ownership is essentially Irish. Kirby Gordon disputes that, but for that, let's accept that for the moment. That does give them a big advantage. That gives them a competitive advantage over you.
Although we weren't part of the initial complaint, we are supportive of the complaint, and we do believe it has a lot of merit. Both the International Council and the Domestic Council have found against Safair. So their approach of just denying and pointing fingers elsewhere, is not confidence building in the industry, and I think it's inappropriate.
The argument will come that who owns you shouldn't really matter, that many countries that had similar laws to the ones that we do about how an airline needs to be owned by South Africans, that's changed in many other places, and there's no reason it shouldn't change here. You would oppose that?
Well, if it changes and we're all working to the same rule book, that's fine. But when one competitor can have foreign ownership of that level and the advantages of it and everybody else in the industry doesn't, then it skews the playing field. So it is the law, and if we can disregard some laws and not the others, then it ceases to be a society, in my view. So while it's the law, it has to be followed, and when it changes, we can take a view on it at that point. But the selective approach and the approach of it's a law they don't agree with is not, it's not something that's supportable in my view.
Sure. Miles van der Molen, thank you very much indeed. CEO at Sem Air. I don't know what experience you've had on various airlines when you've missed a plane. Maybe you've found that it's been overbooked or not, one way or another. It's very interesting to understand what the process actually is. But if that's happened to you, it'd be good to hear from you on that on 011 883 0702 021 446 0567.
702. Stephen is on X.
At Stephen Grootes.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Well, a lot of issues going on in tourism at the moment. There have been changes to how Home Affairs is managing visa applications by people who are coming here. They are allowing the tour companies to have a much faster system to do that. Also, issues, it seems, at SA Tourism. They've denied reports over the weekend. They're not spending all of their budget. And within all of that, there are other questions around how much demand there actually is to come to South Africa at this stage. I've made the point earlier. It's been made many times. Tourism is something that could really help our economy and provide a large number of jobs. We'll speak to David Frost, the CEO of the Southern African Tourism Association, in just a moment. But first, Kagiso Pashwane is a tour guide with Rent-A-Tour and Safaris. Kagiso, good evening to you. You cater for a particular tourist from a particular part of the world. What have you found over the last couple of months? I mean, are you finding that there's a lot of demand? Have you been very busy?
Hey, Stephen. Thank you for the opportunity, man. Look, the last few months of 2024, personally, it was very bad for me. Tourism business-wise just went down. I was busy the month of September and August, September, but from then it just went dead quiet for me. So, but when I spoke to many players around in the industry, they also shared the same sentiments. That their businesses, especially the small operators. So we battled a little bit. The last 3 months of 2024 was very bad. And usually, the month of December, mid-December, it normally quietens down for us in Gauteng because much of the business goes to the coastline and stuff. So we only start being busy again last 2 weeks of the month of January. Yeah.
As I understand it, you deal, I think, with quite a few American tourists. You've been speaking to people in other sectors who get tourists from other parts of the world. What are they saying?
Yeah, I mean, personally for me, I only start seeing the light in the horizon now. My bookings just started coming up for the month of February, and it's my American contacts. So as to the reason why the business died the last few months, nobody knows exactly what has been going on. It's just been a really funny, weird situation.
Kagiso Pachwane, thank you. Tour guide with Renter Tour and Safaris. David Frost is the CEO of the Southern African Tourism Services Association. David, the experience that Kagiso, some of the people in his sector of this industry are having, is that being replicated in other parts of the industry, or are they having a different experience?
Good evening, Stephen. Always a treat to talk to you. Kagiso has just given us I think, a coalface view of where we are. There's often a lot of hype around tourism, and everybody wants to tell a good story. But I'm an economist by training. I always go back to the numbers, and the fact is, Stephen, we are not in a good place in terms of international tourism into South Africa. We are at 81, if you look at January to November, the 2024 period of the 11 months, January to November, compared to the same period in 2019, we are only at 81% of that 2019 figure. So we have not bounced back from COVID. And there are a number of factors at play. Certain markets have shown a stronger resilience. So, for example, the USA, our numbers out of the States, which is our second biggest market, they're almost 100% of where we were in 2019. But the other key markets, particularly our key markets out of the UK and Europe, are lagging well behind. The UK is only at 79%, Germany's at 79%. And there's a solid mid-market that we used to get out of those countries that were far more intrepid, that moved around the country. So, yeah, there are big concerns. Key areas, Cape Town, the top-end lodges at Kruger, they're well over 100%. But that means that our geographical spread has actually got far more acute. So areas like the Garden Route, Mpumalanga, KZN, they're at 50 and 60% of where they were in 2019, and they are certainly feeling the pinch.
I suppose the obvious question is why? I mean, I don't know if the international tourist has less money than they used to have, or if there are just better attractions or better priced attractions, or people don't want the long-haul flight.
Look, I think we need to unpack this at various levels. So, firstly, with our exchange rate, we are still an incredibly good value proposition. But it's my assertion is we are not working together, so we don't have a proper public-private conversation. We're not getting down to that at a granular level. So that would be, what is the strategy to get the mid-market back out of the UK? At the moment, we don't even talk to SA Tourism. When I say we don't talk to them, they don't talk to us. We are open. We have put forward a modality called a structured engagement that we can get down and strategize around this. There are key players willing to come in, people like Nando's, they've got a big footprint in the UK, willing to work with us. But we can't seem, and it's this perennial problem in this country, Stephen, about, the public-private, lots of parroting about partnerships and all this, but it just doesn't take place. People just can't get to that practical level. Let's get into a room together, spend a day, the best private sector brands that have been doing this for 20 years, that spend far more than SA Tourism in terms of the overall spend. Let's put our efforts together and make this happen. And all it requires is, there's a classic Yiddish thing, where there's a bull, there's a way. But we don't seem to find the way on this.
I mean, there were reports about SA Tourism over the weekend. They've angrily denied them. They say they are spending their budget. There are a couple of other intricacies to it. Are they not pulling their weight, in your view?
So, Stephen, there are good people that work at SA Tourism that are competent and that I certainly have a lot of time for. There's a new board that I think is particularly skilled. We've got people from the industry on that, but that's going to take time to play out. But the big thing is, let us simplify this. It's about getting into the room with the top private sector brands and the top SAT brands, and you build a strategy from the ground up. So what is the strategy to sort the UK out? What then is the strategy in Germany? The strategy in India and China will be very different. But unless we get into a room together, crack the whip, and come up with a joint plan where we can align private sector spending with the very necessary spending from SA tourism, we'll be on this perennial path of, 81%. Pre-COVID, the Aussies outperformed us. They got 9 million arrivals. We get 2.6. Why do they do that? Because they work together. We don't. So unless somebody at SAT, at whatever level, can have that moment, and we need a political will, we need a CEO that is willing to say, yes, I will sit down with the Tourism Business Council. We put up a modality together. That's what we need to do. And that's how you solve the problem. A lot of hot air about what you're spending and everything else, that distracts us from the very necessary work that needs to be done.
There was news this week from Home Affairs. They've selected a group of tourism companies. They can fast-track visa applications of customers from India and China. Is that kind of thing going to make a difference?
I think it's certainly a move to be welcomed, and the advent of Minister Schreiber has been a game changer. We see it as a very interim measure. The ultimate goal is a fully electronic visa system, akin to what's in play in Tanzania and Kenya. And bear in mind, when I say we at 81% of our pre-COVID arrivals, Kenya's at 140 and Tanzania's at 120. They're eating us for breakfast because they make it simpler and easier. So, yes, the Trusted Tour Operator scheme is a move in the right direction. But, once again, let's tell everybody who the 65 operators are. We don't know. So unless we know that, people and prospective tourists don't know who to go to. But bear in mind, Stephen, the Trusted Tour Operator thing is focused on group travel applications that were clogging the system up. So, independent travelers can still apply through the normal embassy route, but the group travel applications will be dealt with by the Trusted Tour Operators, and we hope that will alleviate the blockages and certainly give us a short-term kick-on. So supportive of it, but the ultimate goal is this electronic visa system that Home Affairs are working on, and the sooner that can be arrived at, the better.
David Frost, thank you very much indeed. CEO of the Southern African Tourism Services Association. Well, a lot going on here, and just looking at the production team for the Money Show and suggesting to them that perhaps Patricia de Lille, the Minister of Tourism, should receive an invitation early tomorrow to come on the programme tomorrow, and we can hear from her about efforts to sort all of this out. She has certainly in public been a champion of our tourism industry over the years, still is the Minister of Tourism, and we'll see if we are able to sort of move anyway in some direction on that. In a moment, we'll talk about something a little less cheerful. How to downsize a company. What do you say to the employees that remain? Don't forget, from 7:30, your shapeshifter tonight, Professor Wiseman Mkhuhlu, an incredible figure, really, if you consider his history. He'll be on your radio from 7 o'clock, just from 7:30, just gone 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. We'll talk about the tricky issue of downsizing, how you speak to workers when you're actually letting some of them go, that in just a moment. Also looking forward to a conversation with Wendy Knowler, your Consumer Ninja tonight. An extraordinary story about something a bank did. It involves home ownership. And I know there are plenty of extraordinary stories about things banks have done around homeowners. It's kind of the way the industry works sometimes, or gives that impression. We'll talk a bit more about that in just a moment. This is quite an extraordinary story. You do want to hear what Wendy has to say. Really looking forward to speaking to Professor Wiseman, Lumkile Nkuklu. Often, I suppose, if you Google him, maybe the first or second hit that will come out is the fact that he was the first black chartered accountant in South Africa. And that's an extraordinary story in itself. He is, of course, I don't know, he might be sick of being judged like that. I don't know. We'll ask him. But he is, of course, much more than that. He did all sorts of things. Was an advisor to President Thabo Mbeki back in the day. Also was the person, I think, that everybody first thought of when KPMG got themselves into so much trouble during the state capture era. Who would you appoint to fix that? Well, Wiseman Nkuklu, of course, is your person. We'll ask him about that as well. Really an extraordinary journey. Looking forward to that conversation with him. Good to hear from you tonight on 011 8830702 021 446 0567.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Well, one of the biggest problems, one of the most difficult things that any manager, any business can have to do is to actually allow some people to go. In other words, reduce their workforce. Let some people go, fire them, retrench them, whichever way you want to look at it. Often it's called cost-cutting or downsizing. How do you manage your workforce after that? Really important question. The CEO of Jackhammer Global is Debbie Goodman. Debbie, good evening. I mean, there can be no doubt it's very stressful for all concerned, managers and workers, when you have to downsize in this way.
Yes, I mean 100%. I think a lot of attention is given to the legalities and procedural requirements of a reduction in force, whichever way you look at it and whichever way you're going to label it. A lot about the people who are going to be leaving. And then once that whole process has been done, there's almost like a sigh of relief. And what is often forgotten is the people who are left behind. And there's so much that can go wrong afterwards. And so that's one of the sort of areas that I think is a leaky faucet in all of the work that goes into a restructuring of this nature, which takes a tremendous toll on everybody. But then there's also the people afterwards that I feel there's not enough attention paid to that.
I mean, the big thing, and you can almost see it sometimes if you walk through a company that's recently gone through retrenchments. I mean, people are genuinely scared. You know, people rely on the income. They've worked hard to get where they are, etc. How important is communication in this moment? And sometimes I think, the managers themselves, a manager might be told, cut your team by 2 people. And the manager doesn't always know what's going to happen after that either.
Yeah, there's a combination of fear and then compounded by sometimes a bit of survivor's guilt. For the ones who are left behind. And overall, not enough attention given to the general levels of psychological safety that are needed in any work environment for people to grow, thrive, engage, contribute. And so there's almost the aftermath after Section 189 or a retrenchment, or even a few people who are let go. Maybe it's not an entire organization, where there's a lot of confusion. And because of lack of communication at all levels, everybody's either watching their back or unsure about how to conduct themselves. So if there were not only a communication around, okay, we're going to go through this restructure, but then what happens after that? There needs to be a ton of attention. And granted, they've been sucker punched. So let's face it, it's not anybody's fault. It's just another layer of communication solutioning that needs to be given a lot of attention, because what you're left with is people who don't know whether perhaps they're going to be next, afraid to ask for things that are important to them, because perhaps if they ask for maybe a salary increase or more flexibility, they're going to be the next one on the chopping block. So what you've got is, and then compounded with people who potentially now need to take on other people's jobs, take on the leftovers of people's work that they need to take on. And overall, I see just poor communication and almost like lack of reboarding. We always think about onboarding, but we don't think about a reboarding process for the organization and team that is left behind and that now needs to go forward.
How honest should you be? And I mean, obviously in some companies, the financials will be quite public, and others they won't be. I mean, do you say to a team, look, this is why we're doing it down to the last rand and cent?
I think even a layer of transparency regarding commercial realities and explaining the business sense and the business case behind a restructure is absolutely essential. People are not idiots. They understand commercials around revenue and costs and profit. And when you explain to people the business case around a restructure, perhaps it's a business line that is no longer relevant. Perhaps it's a division that is no longer profitable. When you actually share that information and discuss the commercial realities with people, that's something that can be digestible and people get it. Oftentimes, I think this is completely overlooked. And so maybe you're not going to open up your general ledger to everybody, but you are going to share with them what the commercial imperatives are and how everybody's going to pull together in order to take the next step forward.
So when you're making decisions, in some cases, in a crisis or in a very difficult position, you might want to involve your employees. How wise is it to do that in this case? Because, I mean, isn't it a bit like, asking turkeys if they'll vote for Christmas? They won't do it.
Yeah, that is a little bit more of a tricky one. I think often it's managers who are asked for their input as to who would they want to be on their team going forward. Often they're in a very, very awkward position because nobody wants anybody to be sacrificed. Sometimes there are certain laggards in a team, some people that you're like, well, this is the bottom 5% of performers in my team. It's pretty obvious who needs to go. And so involvement from managers can be useful. Sometimes it puts them in a very, very awkward position when in fact they don't want to get rid of anybody. Involving a broader community of staff in decisions like this. I have seen it done on occasion, but there you've already got a culture of a very healthy culture of transparency where people are generally involved in many types of business decisions, sometimes smaller organizations. And there, I think we saw this quite frequently during the pandemic, where there was a broader community of staff that were involved in how do we go forward? Does everybody take a little bit of a salary sacrifice in order that we don't have to let one or two people in our team go? So I think that really depends on the culture and the company and the size and all the rest. So I'd say that's no one size fits all here.
I mean, like so many things, that's not about the downsizing. It's not about how you manage it. It's about what you set up before that. The culture would have been in place long before you even got to that point.
Yeah, 100%. I mean, oftentimes the culture of how the next phase happens, I'm talking about the phase after a restructure or retrenchment, is very indicative of the health or toxicity of a work environment. You will have people who will either pull together, be so glad and willing to take on extra responsibilities because they feel a certain way about the leadership of the company, about their connection to their organization, their real desire to see the company go forward and thrive. That's on the one end. And then on the other, it's just suspicion, loathing, grumbling, backwatching, just the most awful sides of an organization, and then everything in between.
One of the big things, obviously, is that now you have a company in a difficult position. You have let some people go, and you have a lower number of people who now have to do easily the same amount of work or possibly even more than the original complement did. And how do you manage that? And this is the big thing. We kind of all know. You kind of feel it instinctively when it happens. Oh, I know how this is going to end. Now I'm going to have to work longer, or this is going to happen, or, the man is fine. You sort of really build up that kind of vibe. How do you manage that? I mean, people have to work more for less.
Yes, and potentially not necessarily. So once again, I think this is a real signal around the health of a culture and a work environment, but it can present a really good opportunity for everybody in the most healthy, positive side of looking at the aftermath of a restructure. This is an opportunity to look at where are we wasting our time? Individuals, teams. where could we be using our time more optimally? Where could we be using AI to reduce busy work? How could we be paying attention to the things that actually move the needle? Where could we be, not be sitting in meetings all day? So I think that in some instances, this presents a real opportunity not to just add additional workload to people, but to completely restructure and look at each individual job and redefine each role. That takes work. It takes really good communication. And in certain organizations, I've seen these restructures turn into a real boost in performance and engagement. On the other hand, it is absolutely, it's like the eye rolling that you see coming toward you when you know what's going to happen. You're going to have to do exactly the same work that you did before, and you're going to get somebody else's half job or quarter job or full job landed on your plate, and dare you ask for any kind of salary increase or some additional flexibility, because that will be totally frowned on. So, yes, Stephen, I mean, we've got all of those going on.
I mean, I suppose in the end, you also, this is really the ultimate test of management, isn't it? Is how you manage all of these things. That's one of the reasons why it's so tough.
Yes. And so if you said to any manager, hey, let's think about a restructure, nobody's going to wake up and start cheering for that. Everybody hates it. However, it is a really good test of how does somebody do this with the greatest level of empathy, transparency, good quality communication, real care for their people, the ones who go and the ones who are left behind, and really get the objective being to those who go to let them leave with in grace, humanity, severance, even help them with some kind of additional support after they leave an organization. And then for the ones who left behind to do exactly the same thing. Don't just dismiss the fact that they were the lucky ones who got to save their jobs. There's a lot of attention that needs to be paid to them. And yes, if you're a manager, that's your job.
Thank you very much indeed. Really appreciate it. Debbie Goodman, CEO at Jackhammer Global. Really is the hardest of things, managing a downsize in your workforce. 20 minutes after 7.
The Money Show.
Consumer Ninja.
Wendy Knowler joins us now. It's a story around banks and properties, and a suggestion that, in fact, a bank, if they believe the property has been abandoned, the bank can kind of install someone there temporarily. Wendy, this is an extraordinary story. It comes from Mpho in Wildervreden Park. What happened to her?
Yeah, it is extraordinary. Well, it was to me. I hadn't heard of such a thing, although it kind of makes sense. So she sent a query in early days of January to say, yes, she owns this house in Wildervreden Park. She's in arrears with her bond repayments and obviously with the utilities as well, because her electricity supply was disconnected by the municipality. So she moved out to stay with her family, which was a short distance away, a 5-minute drive, she said. She said, and between myself and my siblings, we ensure that the property is checked on regularly. The longest period that I've been away from the house was between the 20th and the 30th of December, as I was on a holiday with my family in Durban. And I think it's fair to say that's fairly normal behavior for the festive period. She says, however, I was shocked and appalled to discover that a company had taken occupation of the house. They got a locksmith in, and these cameras were installed, and you can see this on the footage. Locksmith came in. They got control of the property. They were sent in by Nedbank, which has her home loan, and they're guarding the house. Somebody was, it would appear, somebody was staying in the house, a sort of caretaker role. And her biggest gripe was that the bank had not contacted her before taking that executive decision. She wasn't phoned, she says. There were no emails sent to the email address that the bank has on her system. It later transpired that they'd sent an email to an address that she had not used since 2013. They got it off her credit record, which I found quite extraordinary, that they didn't use the email that had been her point of contact with the bank for years. So she says, I found it utterly unacceptable that the agency decided to inspect and guard my property. Well, they were instructed to during a time, and this is a valid point, when many people are away for the holidays. Even worse, several personal items are now missing from her home, and she has before and after photos from that footage to show that some items that were there were now not there anymore.
I mean, I've heard a lot of things about banks over the years. I've heard about the auctions. I've heard about, when people don't pay. I've never heard of someone sort of caretaking or being a caretaker on the property, taking control over it temporarily. It's a new one for me. Is this legal?
You would find that it will be in the terms and conditions, bearing in mind that the banks, jointly own the house. They're covering it. Same reason they can insist that you have homeowners insurance on the property should it burn down or whatever. That's their asset. They've got a lot of skin in the game. So I guess they can. The backstory is that in July of 2023, the bank contacted Mpho about her account and offered her its assisted sales program. She said she was keen. There were some discussions, but she didn't return the signed mandate, which enables the bank to put the property up for sale. She later went under debt review, and the home loan was included in that agreement, but she defaulted on the payments. So that arrangement was terminated in December last month. In late November, she said the bank gave her some bond restructuring options, but all were unaffordable. She said, for example, they wanted 20,000 Rand up front immediately, and I didn't have that kind of money. I said I can do 40,000 Rand at the end of Jan, but I was told that's not acceptable. So this is quite a badly in arrears account. She owes 127,000 Rand. She last paid in October, but she's just got a promotion with a much larger salary, and she's confident that she can settle the arrears. So I approached the bank and said, "What can we do here?"
Okay. So you've got the mortgage arrears, but you've also got the abandoned house. That claim is not true. Aren't they separate issues?
They are two separate sort of processes, but I suppose in this case they go hand in hand. And when I got a response from Nedbank, it is often the case that when a house is abandoned, in inverted commas, the homeowner is in arrears. So I took up both issues with the bank, saying, how did this happen? How many other homes were gone over the holiday period? And can't you find a way clear with Mpho? She's got a bigger income now. Can't we settle this? Because banks always do say that they repossessing homes are the last resort, hence let's try and sell your house, blah, blah, blah. Anyway, so 2 days before Christmas, says Nedbank evaluator indicated signs of neglect. The garden was completely overgrown, and I've seen the picture that certainly was the case, suggesting that the property appeared abandoned. And the evaluator recommended securing the property to prevent vandalism. Our experience shows that neglected properties, particularly those in arrears, can become targets for criminal activity. To protect the property against vandalism, theft, or illegal occupancy, and this is a big deal, especially in Joburg. We engaged one of our suppliers who specializes in property management and security services. But as we said, surely you've got to tell the person. That clearly wouldn't be okay. So, they said they called her on Christmas Eve on her cell phone. She didn't pick up. It went to voicemail. She said we then emailed the address. They admit that it came from, we used it from a credit bureau trace rather than our records. And don't give any explanation for that. And I think we can certainly call the bank out on that one. That there's just can be no reasonable explanation for that. The third-party company inspected the property. Caretaker there on the 30th. This was all in timestamp photographs to ensure its safety. And after Mpho contacted the company the following day, which was New Year's Eve, we removed the caretaker on the 2nd of January, and we have waived all fees for these services, and no charges will be applied to account. Now, clearly, that's their roundabout way of answering my question, which was, I presume the services for discarding, which obviously is not going to be cheap, I would imagine, they added to the arrears account. But this is their way of saying, well, yes, normally, but in this case, we're not doing it. And then the theft case, she opened a theft case with the police. And then the case was closed, but she's provided all the evidence, and now that case has been reopened. So I'm going to monitor that one. But I was particularly interested, Stephen, in, as I said at the beginning, how many other houses did this particular bank guard, especially during the Christmas time when you'd expect people to be away. And I just got blanked on that one. You will know corporates, when they don't want to answer, they just don't.
They're the same when you invite them onto the show about certain things, by the way. So So advice, I mean, obviously you want to make sure the bank has the right number, email addresses. Do they have to prove that you actually got their communication?
I would think you'd certainly have a case if you can prove that they didn't. I don't know what recourse you could get, but certainly in this case, I would push hard to know why on earth didn't you just use the email address? We've been corresponding about a lot of things. Why take some old address off my credit record? You had no reason to do that. Whether or not there's a proof that they tried to phone her and that it went to mail, I don't know. But certainly in situations like this and many others, and it's I think most people think, well, I don't want to hear from my bank. Well, you do. If they're going to take judgment against you, or if they're going to send you important information that was really in your interest to know, you must. It's up to you to update, make sure that they've got your point of contact details correctly. So that's your physical address, because they can get a default judgment against you. They just have to prove that they sent it to the address on record, right, as summons or something like that, a Section 129. So notice. So do it. Email, cell phone, and physical address. Phone your private banker, phone your bank, whatever. Go in there and make sure that those details are absolutely correct. It really is in your interest that is right.
I mean, I think one of the big challenges at the moment is if I get calls from landlines or private numbers, I generally don't answer them because I presume it's spam. I don't trust emails anymore. I mean, I trust WhatsApp, but I don't really want all of this to move to WhatsApp either.
No, because a lot of the fraudsters will pretend to be your bank, your service provider of some kind, and then switch you over to WhatsApp. And we're so comfortable with that, we do it. But that is currently a sign of something that's not really, that's dodgy, unless you have an existing relationship with a service provider or someone in that company that you have had, proper correspondence with on WhatsApp before. But you're right. And I think also your bank's going to inform you via WhatsApp, SMS, if there's suspected fraudulent activity on your account, or someone wants to do a SIM swap on your number. That's actually a fraudster. So we need to not dismiss everything as potential fraud and only look to WhatsApp. You raise an important point, but it's going to harm us in one way or another sooner or later, Stephen.
Wendy Knowler, your Consumer Ninja. Thank you very much indeed. Do appreciate it. In a moment, your shapeshifter this evening, Professor Wiseman Nkhuhlu. Just gone 7:30.
The Money Show.
Shapeshifters.
Well, very few people have lived the kind of life Professor Wiseman Nkhuhlu have lived. Growing up in Kala in the Eastern Cape, being able, somehow, it's an extraordinary story, to go to UCT in the 1970s, eventually becoming the first black chartered accountant in South Africa. He's played important roles in the accountancy profession, in business, being an advisor to President Thabo Mbeki, to helping KPMG after the state capture era. And it's a great honor, Professor Nkhuhlu, to speak to you again tonight. Thank you so much for joining us on The Money Show.
Good evening, Stephen. Thank you very much for the invitation.
You were born in Kala. It's a small village in the Eastern Cape. I mean, I presume it was smaller then than it is now. It also gave us Gwede. What kind of community were you born into?
I also gave you Kodongwana now. He's also from Kala. No, it's a small community. But I think in that community, there were a few families that had been exposed to Christianity and also were very keen to get their children educated. And then I happened to be one of the fortunate ones then to have a father and mother who were keen that I get proper education. And they make the sacrifices then for me. And I think it was not in vain.
Well, I mean, there must have been extraordinary sacrifices. It was difficult for someone in that part of the world during that time, apartheid, of course, to be able to go to school. Even to get a matric was considered very difficult at the time.
Yeah, you're right, Stephen. It was difficult, but they made sacrifices. After finishing my junior certificate, they made sure that I get to one of the most prestigious high schools at the time, Lovedale High School. So that's where I went for my matric. But then I got exposed there to other influences and trends, and I didn't finish my matric. I ended up in Robben Island, and also the rest is history, and getting to the mines and ending up, with all these ideas about how can we make Africa better. And this book is about, again, that idea that I have deep in me that as Africans, as Africa, we can do much better than what we have done up to now. So possibly all those exposures gave me these ideas, and I'm taking advantage of that now to share them with the greater South African public.
How did you end up going to UCT? That must have been quite difficult to do.
I went to University of Fort Hare to do my BCom degree. On finishing that degree, I went out to do articles with a firm of accountants. Whilst I was there, it just happened that the Professor Kritzinger, who was the head of accounting at the University of Cape Town, paid a visit to Fort Hare, and I was invited to his lecture. And when he heard about my performance in my BCom, he just invited me to come and join his department at UCT to do the CTA. So it was just one of those things. Without that chance of just being invited to that lecture by Kritzinger, I don't think I would have qualified as a chartered accountant.
So you did articles, you did that qualification, and I made the point earlier on the show that if you Google Wiseman and Kuchlu, one of the first things that will come up is this phrase, and I'll put it in inverted commas, South Africa's first black chartered accountant. And I remember speaking to our first female black chartered accountant a few years ago.
Yes,
and asking her how she feels about that title. I don't know how you feel about that title. I mean, on one level, I could imagine, I think a feeling of pride would certainly be there. But maybe, I don't know, how do you feel about it? Let me ask you.
No, it's a feeling of pride, but at the same time, a lot of responsibility. Because by people looking at me as the first black chartered accountant, they look at how I behave and how I carry myself, whether in terms of the competencies that I exhibit and the behaviors that I exhibit, I really fulfilling their expectation that I be the role model. So it's a lot of pride, but also a lot of pressure and responsibility.
So obviously you did lots of things. It was a very difficult time. 1990 comes along. Where were you by that point? Because obviously the country really started to change dramatically there.
Yeah, no, by 1990, I had become very convinced that, one of the main contributors to development of a people who have been left behind, like Africa and black South Africans in particular, was education. So really, I made up my mind that after qualifying as a chartered accountant, I must go and teach at a university so that I can contribute in producing more black chartered accountants. So with that then in mind, I joined the University of Fort Hare and later University of Transkei. And over time, my colleagues felt that possibly I am a role model, and they encouraged me to make myself available to be the Vice Chancellor. So by 1990, I was the Vice Chancellor of the University of Transkei.
Did you, you were a leader there. What did you think your role then would be? And I'm going to eventually ask you what it was like to work as an economics advisor with President Mbeki, but that in that time you must have thought this country is going to change and wondered what contribution you could make. You're already making a big contribution, of course, at UNITRA.
Yes, Stephen. That was a time of deep introspection. I had to all the time say I'm fortunate to be among the few Africans who had obtained education and who could be lecturers, professors at universities. And I have to make my contribution to make sure that I assist others to actually also succeed in education. But running a university at that time was very difficult because it was at the height of the political struggle. Dealing with students, dealing with workers was a great challenge in many ways because the expectations were very high and people had run out of patience. They were making demands on us in terms of looking at what privileges and resources were available to white institutions, and they were expecting us at the University of Transkei to give them access to the same kind of support. So those were difficult times. But, at the same time, at that time, a person like myself was already a leader in education. The big question was that freedom is close. Are we going to have the capacity in terms of skills and to actually take advantage of freedom to actually uplift ourselves out of poverty and underdevelopment? So that's it. What was paramount in my mind and in everything that we were busy with that time. Are we doing enough to make sure that when we're free, we'll be able to use freedom to lift our people out of poverty and underdevelopment?
At some point, you ended up in government for a little while with former President Mbeki.
Yeah.
And I've spoken to some people who've worked in government and absolutely loved it. And I've spoken to some people in government who don't like to talk about it very much. And I've spoken to some people who will say they didn't really enjoy it. I mean, obviously at the time, the economy was growing. People were quite excited. Things were moving. I mean, there's a little bit of frustration here and there. How did you find it?
Yes, that was a very exciting time, Stephen, because, people like myself, we never thought we would experience freedom during our time. So really, it was very exciting. Also, to be granted the opportunity to take part in policy making at the highest level, being an advisor to the president was a great opportunity, privilege. And it made me, again, to think very deeply and to ask myself every day whether I was really worth that position. So I worked very hard. Of course, it was very challenging working with President Mbeki because he would read and analyze and make sure that on every aspect, everything that has to be discussed, he is well informed. And when he took up the responsibility of saying now that South Africa is free, how is South Africa going to contribute to the integration and development of the African continent, and came up with the idea of the new Partnership for Africa's Development and the African Renaissance, and placed me at the center of that. That was very exciting to me, very challenging, but I'm very grateful for those opportunities. And the fact that now I've written a book on People's Full Leadership, really, a lot of ideas and experiences and insights, I gained them during that time.
I'm going to focus on your book in just a moment. I do want to just ask you before I get there, though, because I remember speaking to you. I think the first time you and I shook hands was at an event just after the state capture era, and you were going to KPMG. Yeah. You've written about that since. And I've often wondered what that phone conversation or whoever approached you must have been like when someone says, look, and you would have seen KPMG was all over the place at the time. Lots of things had happened. And someone, I think if you'd had to ask, the whole country, who will fix that? Well, they would have said Professor Nkoshlo was the first person you called, because of your experience, because I think of your standing in society. All of these things are important. I mean, I know you've written about it since, but that must have been quite a job and quite a time to do it.
Yes, Stephen, it was a big challenge. You know how it came about? The accounting profession, South African Institute of Chartered Accountants in particular, had given me big assignments from about 2008. Arising out of the global financial crisis, the global standards, accounting standards setters decided to form a committee that would look into whether auditors, accounting, contributed in deepening the crisis. And then I was singled out from South Africa to serve on that global committee to look into this thing. And during those conversations, the issue of the role of auditors in society and how important it is that auditors be trusted was again repeatedly discussed. And really, it really dawned on me during that time how important the role of auditors is in society, how important it is that they must be trusted. So then when a few years later, 2017, KPMG got into the poll in which it was, and I was asked to come in. I came with that mindset that this is a great profession, and really society's expectations are great, that they rely on this profession to give assurance that the financial reporting by big company CEOs are truthful. So now, if this the leading firms in this profession are not trusted by society, who else the society can trust? So I went with that mindset. I said, this has to be fixed. We have to restore trust in the profession in the interest of the capitalist system as a whole, because it cannot operate if institutions, especially companies, are not trusted. And that trust can only come when the audit profession fulfills society's expectations.
Professor Wiseman Nkuklu is your shapeshifter tonight, and we'll talk a bit about his book in a moment, Purposeful Leadership for Africa in the 21st Century. He's with us all the way through until 8 o'clock.
The Money Show.
Shapeshifters.
Honored tonight to have as your shapeshifter, Professor Wiseman Nkuklu, with us for another few moments. Prof, your book, Purposeful Leadership for Africa in the 21st Century, why specifically the leadership in Africa? And I know there's a little bit of a tension at the moment on our continent. You clearly have one or two specific points to make based on your experience while you were working with President Mbeki.
Yes, Stephen. Firstly, because I worked on the new Partners for Africa's Development, we came up with a comprehensive program to address Africa's underdevelopment. We covered infrastructure, governance, and so on and so on and so on. So, but now, since my retirement, I've been thinking as to whether we're focused on the right things or not. Really, in this research, the big point that I'm highlighting is the fact that, yes, we're looking at all these things that are important in creating an environment for development. But the real change matter, the real issue that will really bring about meaningful change to the material condition of the people is closing the gap in science and technology between African countries, in this case, South Africa, and the developed countries. So I'm highlighting that. I just felt that in all the work and the books that I've read, this gap, this issue of closing the gap is not highlighted. That's the first thing. So that's the point that I'm making very forceful in the book. And then I use the experience of other countries that realized that the gap had developed between them and the Western countries on science and technology. They took steps to close that. That's what made it possible for some Asian countries to develop, to move from the status of underdeveloped countries, third world countries, to developed countries. So my point is that possibly in Africa, we are not prioritizing this issue of closing the gap in science the way that we should. So to do that, we need purposeful leaders. So I'm saying purposeful leaders in this case must be leaders who have in the first place grasped that the priority must be closing this gap. They must have grasped that. And then so that in actually prioritizing their economic policies, their investments, their development programs, they make sure that they make an impact in closing the gap. In that context, the most important intervention has to do with enhancing the knowledge and technical capabilities of our people, especially African people, to be able to participate meaningfully in a modern economy. Secondly, the whole economy has to be driven by economic policies, investments, and programs that really are directed at closing the gap. So that's my contribution, that I think that is meaningful. On reading the other books on the development of Africa and South Africa, I don't believe this matter has been highlighted the way that I'm doing in this book. And I believe that it's a contribution that all those who aspire to be leaders should take note of it and actually read and acquaint themselves with the views that are expressed in the book.
I don't know if you read the Economist magazine. They have an edition out where they talk about very recently a sort of special report on the lack of Africa's development. I don't agree with everything they said in it, but one of the points they do make is that African leaders are simply not ambitious enough. And I understand you sort of ask if African leaders have abandoned their ambitions. People just aren't really thinking about the future, would be the claim.
Correct, Stephen. That's the point I'm making. You see, that we are not ambitious enough. You know, if you look at how these Asian countries, successful Asians have performed, it's clear that as soon as they had space post the Second World War, they made up their minds that this thing that has happened, that we find ourselves behind Europe, is not we cannot allow that to last. We have to work hard to close that gap. And they focus on that. In other words, scientific and technological development of their countries and skills and knowledge, scientific and technological knowledge of their own people really uplifted that. And then they were setting targets, economic growth, the level of industrial development in their countries and so on. So when in South Africa, and African countries, we don't talk about our ambitions, for instance. Like if you take the issue of education, one of our ambitions has to be that we have to be the top performer among the the developed countries that are at our level, our peer group. Why must we have the ambition of being number one? Is because we were really held back by Bantu education for many decades. So really, when we're free, the first thing would be to say we have to take steps to close this gap, and our ambition must be to be number one in terms of the quality and relevance of our education, you know, among the third world countries. That's just an example.
I mean, one of the things that worries me actually is that our continent might be falling almost more behind at the moment. If you look at how the United States is moving ahead with artificial intelligence and things like that.
Yes, Stephen, that's the point that I'm making. I'm saying, yes, you know, the issues of macroeconomic stability are important in terms of establishing the conditions. The issues of human rights, democracy are important, but they create the conditions, conducive conditions. But the real priority has to be doing things that will bring about improvements in the material conditions of the people. You do that by giving them enhancing their knowledge and skills in areas that are relevant to actually them being able to be more productive and really create the kind of goods that are in demand in the 21st century. And we're not doing it. Actually, in the book, I'm saying that if really there's no change of focus or priorities, we'll still be talking about Africa being the least developed continent in 2050, and we will still be talking about poverty in South Africa.
The two volunteers sent down
over 60%.
Professor Wiseman and Nkuhlu, sir, thank you very much indeed. Really appreciate the time, and thank you for sharing your time with us. Your shapeshifter this evening on The Money Show.